What is going on, investors? Hopefully you guys had a great day out there. It is time to talk about Adobe Incorporated, ticker symbol ADBE. The company just reported their Q3 earnings, and we are going to get into them. We'll not only talk about the earnings, we'll also talk about the Q4 guidance that Adobe passed along during the press release as well. We'll jump into the numbers, okay? We got to take a look at the revenue, the profit, the cash flows, the balance sheet. I'm going to get you completely squared away with what's going on over at Adobe. And I tell you what, if you're new to investing, in my opinion, Adobe is one of the cleanest and easiest companies to understand. So this is where I would start. And then when you get to like an Amazon or even like a Microsoft, those companies are a little more complex to analyze. But if you get Adobe, you're going to be able to graduate to a little bit more complex company, in my opinion. So you're going to love walking through these financials. And then obviously we'll look at this from a technical perspective as well. Adobe's been on a monster run. And I know if you're watching this video during the week I'm publishing it here, during the week of September 20th, probably a lot of you are watching videos and reading stuff about Evergrande over in China and how it's going to crash the market and all those types of things. And I'm not here to say maybe it won't, maybe it will. I don't know. That's not for me to decide. But here's what I'm going to tell you is, have the markets pulled back? Yes. Is Adobe pulling back in the after hours? Absolutely. Down $25 in the after hours. That's good for a 3.89% move during the after hours. But here's the thing that I want you to keep in mind. Stocks like Adobe over the last 6 months are up 45%. Hello, year to date up 28%. Over the last year, this stock's up 37%. When we look at the stock chart back in June, like mid-June, this stock was $530 per share. Now today it's sitting at $620 per share. So I don't care if it's Evergrande, Ariana Grande. I don't really care. The market was kind of due for a pullback. So whatever the excuse is, I tell you what, the market was due for it. And I look at the analytics here on the channel, the investor channel, which I'm pleased that you're tuning into today. The vast majority of you tuning in are under 45 years old. And to be quite frank, you guys should dream about these types of pullbacks. You hope they get deeper and deeper. And so we'll wait over the next couple of days. I'm not going to say that I'm not going to post a video later this week about the situation that we have going on, but I'm going to monitor it and see what happens. And just keep in mind, stocks are up huge over the last couple months. A pullback is not only good, but it's actually expected. And you should be excited about it, especially when we're talking about stocks like Adobe, which just came out with their Q3 earnings. Like I said, we're going to get into them here in a second. Take a look at the total earnings really quick so I can show you the guidance on a quarter-over-quarter basis. So they saying for the last 3 months, revenues came in at $3.9 billion. Adobe's going to say for the next quarter, this is the upcoming quarter that hasn't finished yet, the Q4, they're saying revenues are going to come in a shade over $4 billion, $4.07 billion. So on a quarterly over quarter basis, we're still seeing revenue growth at Adobe, and that's exactly what you want to see, because when I walk you through these financials, you don't necessarily see explosive revenue growth year over year, either on a quarterly basis or a 9-month basis. But I tell you what, you're going to see operating income that is growing faster than almost any company that you'll look at during this earnings season. Last 3 months, the most recent quarter is this left-hand column. And since this is the third quarter, we got 9 months in. We've got that year-over-year basis as well on the 2 right-hand columns. We're going to focus on this total revenue. The vast majority of Adobe's comes through subscription, their Creative Cloud. To be quite frank, here on the investor channel, we wouldn't necessarily survive without Adobe software. I use their entire suite of software, and I think I ship them $60 a month for the privilege of doing that. We noticed that revenues over the last year on a quarterly basis went from $3.2 billion up to $3.9 billion. Again, like I said, it's not explosive growth. Okay, you look at like a Facebook, even maybe like a Google, and certainly other companies out there, they're growing faster than this, but that's not why you're going to buy Adobe. And the nature of Adobe's products, you're not necessarily going to see that type of explosive growth. So I'm not really worried about that. What I want to see is steady growth, and it looks on a quarter-over-quarter basis on the Q4 guidance. We are going to get that with Adobe. We see here for the last 9 months, we went from 9.4 up to 11.6 billion. Again, great growth. Is it explosive? Not necessarily, but here's what I want to show you is these cost of revenues, this gross margin is better than virtually any stock. In fact, Adobe would easily be in my top 5 stocks in terms of gross margin, because here's what I want you to take a look at this. total cost of revenue for this 3.9 billion was 467 million. That's right, folks. We spent 467 million to make 3.9 billion in revenue. Guys, if you don't get excited about that, check your pulse a little bit. Maybe go for a run. Get a little bit excited because this is absolutely phenomenal. We see it holds true for the 9-month as well. I mean, this is like not even 10% of their revenue goes to the cost of it. We spent 1.3 billion and we earned 11.6 billion off that for the last 9 months. It's unbelievable and, in my opinion, unparalleled in this industry. Sure, you see high gross margins at Facebook and at Microsoft and at Google, but this is really, 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 really clean in my opinion. Now, we do have other operating expenses, okay? But it still paints a glorious picture. We got R&D, selling and marketing, general administrative. Our total operating expenses went from 1.7 billion up to 2. So just kind of a casual increase, okay? And for the 9 months, we went from 5.1 billion up to 6 billion. So barely, not even $900 million in cost. And they bolted on over $2.2 billion worth of revenue. This is unbelievable. So we take this $3.9 billion we did in the quarter, we minus off our cost of 467. That gives us 3.468 billion in gross profit. Then we take off these operating expenses of 2 billion. That gets us down here to our operating income of $1.4 billion. So off $3.9 billion in revenue, we made $1.44 billion in operating income. And here's where I want the growth is actually kind of hidden with Adobe. A lot of people look at top line revenue growth, okay? But here's where the fantastic revenue growth is with Adobe. It comes from the operating income side, because notice we had $1.069 billion worth of operating income last year, and now we grew that to $1.4 billion. That's like 40% growth on the operating side, okay? Yes, I know Facebook and those companies grow top line by 40%. We're growing our operating income by 40% over Adobe. That should get you very, very excited. For the last 9 months, we went from $3 billion up to this $4.3 billion. Oh my goodness, these are absolutely phenomenal numbers. Now, from the balance sheet perspective, paints a similar story, okay? Could they be burning cash doing other things? No, they're doing a nice job. This company is very, very well run. In my opinion, they probably could be a little more aggressive, maybe on the acquisition front or product development front, but they're doing a beautiful job controlling cost. Cash and cash equivalents went from, we'll call that 4.5 up to 4.6. So a little bit increase there. Short-term investments basically flat. All things being considered, our total current assets ticked up by about 500 million. Our total assets ticked up by about, we'll call that about 2 billion. Looks like a lot of it was tied up into goodwill, so they must have made or closed an acquisition during the most recent quarter. That's usually where that comes from. We do have some debt on the balance sheet, but it's basically stayed the same year over year, and I don't mind that. I don't mind this company taking on some debt to do an acquisition, to retain some employees, to do something with that money. I don't mind that at all, because when you look at the cash flows, when you look at the operating income, this is a company that can absolutely afford to take on those types of things. Now, from a cash flow perspective, paints a little bit different story. Okay, we had this fantastic $1.2 billion worth of net income. We were sitting at 955 in the previous period, but our cash flows actually went down over the last 3 months. We went from 1.43 down to 1.4515, so basically flat, but down just a little bit. Not too concerned about that, okay? They paid out a little bit more on stock-based compensation. They also have changes in operating assets and liabilities. All things being considered, cash flows very strong. Okay, what are they doing with that cash? Because we saw they have $1.4 billion worth of cash flow in the quarter. My guess is for the last 9 months, they're sitting well over $4 billion worth of cash flow. You're saying, well, why isn't it flowing up here to the cash? Okay, cash was essentially flat. Current assets was up just marginally. Well, they're buying back the stock. And so you see it here, repurchase of common stock. We did 500 million last year, and we took that up to $1 billion. Okay, and so they're not finding a lot of uses for the cash, but they are using it to repurchase the stock. And we'll see if Adobe steps in the coming days, because as we talked about, stocks are starting to reverse, and it's not at all something I would be concerned about. In fact, this stock could retrace all the way back to the previous highs of 530. really wouldn't be that big of a deal, honestly, okay? And so am I predicting that? Not necessarily. Okay, from a technical perspective, I would say we're kind of in the middle here, okay? This stock channeled like a lot of stocks. If you're fans of the show and you watch our FANG stock recap show, every single FANG stock consolidated sideways, okay? Google broke out first. We've seen Microsoft break out. We've seen Facebook break out. Other companies are starting to break out. Netflix is starting to break out as well. But a lot of these tech stocks pulled forward huge amounts of gains after the virus, okay? When you zoom this out, a lot of stocks did this. They crashed in last March, and then they went on a monster run, and then they consolidated for a year. In my opinion, the stock market and these mega cap stocks are that is in the cards again. I think these stocks are going to consolidate again. You just cannot go from 530 up to 680 on these stocks in 6 months without these things starting to pull back. And so in my opinion, we're going to form some sideways consolidation. And so two ways you can play this is you can say, well, look, the bottom might be in. Here's our, I just drew this box on here. And you could say, well, the top's in here up at 680. Here we are sitting down here at 620. I like this. I'm going to buy. No, what I personally would do is wait for some kind of reversal. We'll see some kind of bounce, and that could, it could be a big bounce. It could take us all the way back up to 680, quite frankly, and then we could come all the way back down, okay? And we saw that for nearly a year for most of these tech stocks, okay? This stock started at 460, bounced to 520, came back, up, down, up, down. I would expect that to happen with all these tech stocks, including Adobe. So wouldn't necessarily run out there. I know this stock is down 3% in the after hours. It's probably going to follow through tomorrow. You're probably going to see further selling on the stock market, whether it's based on what's going on in China, what's based on what's going on in the US, with the health situation, with global politics, whatever it might be. I would absolutely expect stocks to start consolidating, but I personally would wait until you see some kind of bounce. And what is a bounce? It's not, it's not an intermediate bounce, but what you want to see is start seeing higher lows. And so you can see the patterns that we made here with Adobe. The stock would come down here. It would make a series of lows, and then it would start making higher lows. And that is a reversal. Okay. When stocks are just making low, 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 low and going, just let them continue to drop. Don't feel like you're Warren Buffett Jr. and you're going to be able to come in there and pick a bottom, because I tell you what, when you make this big of a move, you can make a big move down. This stock could retrace and retrace hard. In fact, it wouldn't at all surprise me if the stock market just retraced all these highs that it made with Facebook, Apple, Netflix, Amazon, Tesla, any of these stocks. Wouldn't surprise me if this thing came all the way back to 530. Now, am I anticipating that? Would I place my bets on that? Not necessarily. I'm just telling you that when stocks lose their momentum, it's just like the momentum on the way up. These things can run, and they can run hard. In fact, if I was sitting here back in June saying, hey, this stock in 6 months or in 3 months is going to go from 530 up to 680, I would have gotten a ton of comments saying how crazy I was. And so the same thing can happen now. We can go from 620 all the way down to 520. It wouldn't at all surprise me. And in fact, it would be welcomed, especially if you're an investor under, say, the age of 45. It could give you a great buying opportunity. But that is what you have with Adobe. I would absolutely stone cold put this stock on your watch list. They're doing shareholder friendly stuff like buybacks. The balance sheet is about as crystal clean as you can get. In fact, this company could borrow more money and leverage this up even more, do acquisitions, do things that maybe they're able to do. From a regulatory perspective, I would absolutely welcome that if I was an Adobe shareholder. But what absolutely blows Adobe away from virtually every other stock outside of major tech FANG is the gross margins, and the gross profits are phenomenal. $3.9 billion worth of revenue, $3.5 billion worth of gross profit. For the last 9 months, we had $11.6 billion worth of revenue, $10.3 billion in gross profit. This is a company with huge amounts of margins for error. So even if we see a softening in the economy and those types of things, this company will survive, and not only survive, but likely thrive, because they have the financial backing to do that and soar over competitors as they might not. Hopefully you guys enjoyed this video. We'll be back again soon with more videos. Lots of videos coming in the coming weeks as we re-kick earnings season off again. We'll see you again soon. Good luck with your investments.